Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 13th of April. Starting off with Altus, where there's been a double bear trap rebound from below the old August low at 53 pence, or 54 pence in fact, and just nudged down to the 52 pence area twice last month and this month, and then we've broken this line of resistance from January in the 50-day moving average at 56 pence. Above that area, looking for a target here as high as 65. Not a great upside at this stage, but the setup looks good, and we've got a bullish divergence line there as well. So the line rising, even though the share price was previously falling. So that tends to be decent signal or sign of a turnaround. On to Angus, which has a slightly different setup, which maybe not everybody has spotted. Here we've got a situation where the shares have bounced off an old resistance line, and that's become new support near 1 pence. The view now is at above a penny, especially above the 50-day moving average, just around 0.98. We're looking for a target here at the top of a broadening triangle from September 2020, as high as 2.1 pence, perhaps as soon as the end of next month. We've got both the 50 and 200-day moving averages rising, and also an uptrend line in the RSI window, so looking relatively healthy, especially while we hold above the 1 to 1.2 pence area. Another situation which is looking encouraging is Cobra. Here we've gapped up today. There was some news, I believe, and we already hit the triangle target there around 3.1 pence. We've got that triangle up to 3.2, that resistance line there. So that's the initial target, obviously not very far away. But the bigger prize is for the shares to hit the top of an October rising trend channel at 6 pence over the next 1 to 2 months on any end of day or weekly close above 3.2 pence. So looking very well poised there for Cobra, and the upside certainly on the tap while we hold above the support line from January around 2.6 pence, above 2.6, looking for as high as 6 pence on Cobra. Interesting turnaround or recovery for East Star. Here you can see that we broke old lows, historic lows there around 4.2. We're now back at that sort of level. But the trend line break there from March and the slingshot RSI rebound, I call it, has helped the shares recover quite well. Gapped up today through the 50-day moving average. And the longer we stay above 4 pence, the greater the chance of a move towards 6 pence at the top of a broadening triangle from the beginning of the year. So rather better, and the more mileage we can have above the old low there from January around 4.16, the better in the near term. On to Galileo, which has been starting to look more and more encouraging over the last few weeks. We already had that trend line break there, the break of the February resistance line around a penny. We've got the 50 and 200-day lines, or we've got the 50-day line at least rising, which is always good near the lows. The view now is that the longer we stay above a penny, the greater the chance of an initial target here at 1.4, which doesn't seem too far away now, and the big picture target, maybe 1 to 2 months time frame up to that resistance line there from last June at 2 pence. Maybe we see that by the end of next month if we can get some momentum going. One of the better RNSs of the day came from ImmuPharma, which has finally come out of its slumber. We were down at 5p just at the beginning of last month, so pretty good return so far. 7.25 pence is the resistance line there, which has been broken. We got through that, so that's pretty encouraging, and it does suggest that we could head up to at least 10.5 pence. You've obviously got the major resistance there for the shares, sort of 1 year resistance around the 10.5, 11 pence area. If we can get through that, then obviously we can then dream of greater recovery. But at the moment, 10.5 to 11 pence, the best case, while we're above 8 pence, which was former December to February resistance. I've covered Jangada a few times in the recent past, and seems to be merit-worthy at the moment. Here you can see that we hit the initial target there around 9.5 pence. The longer we remain above that, which it looks as though we will, the greater the chance of the latest bull flag breakout leading to 14 pence by the end of next month, or perhaps even sooner, which would be a decent result. But just these higher highs and the now rising 50 and 200-day moving averages looking very encouraging over and above that tight bull flag. Again, another positive signal, charting signal that is. Moving along to Resolute mining, and here we had double bear trap gap reversal last month with the bear trap below 14.5 pence, which was January-February support, so that was encouraging. Then we had the sideways shuffle, as I call it, above a rising 50-day moving average, and that's led to a gap higher today. So it looks as though Resolute could at least get up to 24.25 pence, which is post-October resistance. And then after that, we can see whether the shares can do a bit better. But that, well, the triple gaps higher that we've had in the recent past, very encouraging indeed, just over and above the fact that obviously this is a rather illiquid situation. Just a few stocks to go now. The contract of the day came from Shearwater, I think 21 million, and it was already flagged on the daily chart. We had a gap down and then a gap higher, bear trap gap reversal, and the gap through the 50-day moving average on the 17th of March was actually a decent signal to look at this from a bullish perspective. A bit of a shuffle there above a rising 50-day moving average that we had over the last week, and that obviously anticipated today's move. You can still get up to £1.70, which is the top of that triangle from October, and that's valid while we hold above the old £1.24 pence peak from last month. Moving along to Sareum, which continues to recover strongly. This was noteworthy with the trend line break through the August resistance line that we had to start the week, and we followed through nicely with another gap now through the 200-day moving average above that at £2.73. It's a possibility of retesting the best levels towards £5 by the end of next month, so a really big turnaround there for Sareum. Finishing off with Ted Baker on a rather slow day. Normally wouldn't make the grade, but here we are. Here we had a gap through the initial March resistance around 106, and good consolidation, sort of bull flags that we've had since then. While we're above yesterday's low at 141, we could still get up to £1.75, which is the top of that rising trend channel from October. That's it from me today. More updates tomorrow.